One of the lines on Schedule 1 is for taxable refunds. Often this line has clients in a quandary, and we have to educate them. They may tell you that they feel this is a double taxation, in which case you'll need to explain that it is not. A state refund is only includable in income if the taxpayer itemized last year and deducted the full state withholding from his return. In Module 2, you'll learn that a taxpayer may either take a standard deduction or itemize. If the taxpayer itemizes, one option is to deduct state income tax. So if last year the client itemized and deducted the entire state withholding reported on their W-2, and then this year received part of it back, the amount received back is recaptured as income on the front of the 1040 the year they received it. Let's imagine that Darren Jones itemized in last year's return and deducted the state withholding amount of $4,200 reported on his W-2. Later, he prepared his state return and found that his state taxes were only $4,000 for last year, providing him with a $200 state refund this year. Since he deducted the entire $4,200 last year, he needs to recapture the $200 as income this year. So, what if the story were different and Darren had taken the standard deduction last year? In that case, Darren wouldn't have to show the $200 refund as additional income this year. What about unemployment compensation? Is that taxable? You bet it is. Do people normally have tax withheld from their unemployment? Usually not. And this often causes them to owe taxes at the end of the year. If receiving unemployment compensation, I recommend that my clients have at least 10% deducted for withholding. In order to do that, the client needs to complete Form W-4V, which is a voluntary withholding request. You should be aware, though, that for the 2009 tax year, the first $2,400 of unemployment compensation is tax exempt. If you get a copy of the taxpayer's previous year's federal tax return, you'll be able to determine if the client itemized last year by looking for Schedule A. Then a quick check of their state tax return will reveal whether or not the taxpayer applied for a refund. To confirm that it was received, your client should provide you with the Form 1099-G they received from their state revenue department. This form is very simple and will show the amount the state issued as a refund. Also, when the state pays unemployment compensation, it will be noted on the 1099-G.